Welcome to the latest in Fitch's series of virtual investor meetings. I'm Kevin Degnan, Global Head of Structured Finance and Covered Bond Ratings at Fitch. With me today is Andreas Wilgen, who co-heads our North America ABS group, and Hylton Hurd, Senior Director covering North America Autos and Commercial ABS. Andreas, Hylton, thanks very much for joining us. Andreas, let's start with the health of the U.S. consumer. The economy continues to improve, unemployment is at an all-time low. Are we seeing the same sort of improvements in terms of the consumer ABS transactions that we rate?
Thank you, Kevin. So you provided a very good summary of the macroeconomic backdrop. You need to add to that, though, the outstanding amount of consumer debt. It has passed record highs recently. The biggest contributor in that context is student loan, which has grown over the years since probably 2000. It is now at a record and has increased in line with college education cost, as well as the increased number of U.S. students at the universities. Second biggest contributor there would be auto loans, also increased, declined initially after the crisis and have increased steadily since 2012. And likewise, credit card debt has also increased recently and is now beyond the biggest amount outstanding that we had pre-crisis. Performance-wise, by and large, it's still stable. It's matching the macroeconomic environment. We believe, though, the performance cycle is turning or has turned. That probably accounts for most sectors, although there are pockets of the sectors where it's far more visible than it is, for example, in prime. And subprime auto is a good example, and marketplace lending would be another one, where probably since 2015 we have started to see a turning of the cycle.
Very good. Andreas mentioned autos. Hylton, that is the largest core ABS sector. Are the combination of some of the weakening consumer metrics and weakening used car prices impacting the performance of any of the ABS transactions that we rate?
Yes, and I think it goes with the theme of just gradual declining asset performance in 2017 across all three of those sectors, so prime, subprime, and lease ABS. In the prime sector, we have less concerns. No concerns on frequency. Clearly on severity, loss severity is increasing, and that's really just driven by lower used vehicle values, which I'll touch on a little bit in the lease discussion. In the subprime sector, there's clearly more headwinds there, and there's a lot of headlines going on, and you should expect that to continue this year. Performance is weakening. We're seeing losses going to probably reach peak levels later this year. However, we only rate the two biggest platforms, General Motors Financial's AmCar platform and Santander Consumer's START platforms. We don't really have any concerns on those two. We see losses rising, but they're within our expectations. In the lease segment, it's really the story of increased lease residuals coming back this year. We have about just over 9% increase in residuals coming back this year. That's really going to slow residual performance overall. And in terms of ratings, still no impact because we go back to the 08-09 period when we derive our residual proxies, and we've still got a lot of room to move before any concerns there.
Let's talk a little bit about off-the-run product types in ABS. One of the areas where we've seen the most dramatic growth is certain segments of unsecured consumer ABS, marketplace lending, handset finance. What's our outlook, Andreas, for those areas?
So marketplace lending in the percentage growth is clearly the biggest. I mentioned earlier the outstanding consumer debt. As a percentage of outstanding consumer debt, it's still very, very small. There's an impact that segment has on other ABS sectors, so that's why it's very relevant to keep an eye on it. For marketplace lending, loan securitization themselves, we only participate in Prosper transactions. We have rated two deals of the Chai platform, or more recent, the Prosper own securitization. Prosper perhaps is a good indication of the whole sector. Performance started to deteriorate in the second half of 2015 on the originations, continued in the first half of 2016 until the events at Lending Club that impacted the whole industry in the middle of 2016. Most of the companies have actually reacted well with tightening the underwriting, improving the underwriting models, and the underwriting models are now better to differentiate the risk, which largely accounts or largely captures now the deteriorating performance that we've seen over those two areas. At the same time, though, some of the companies have used that as one argument for expanding or increasing the risk appetite, such that the proportions of loans that they're originating in the lower risk rates is actually increasing. resulting in higher loss expectation for this transaction or the most recent transaction than what we actually had for the earlier two transactions. Outside of marketplace lending, you mentioned handset receivables. Fitch has participated in all the public deals from the Verizon platform. Verizon is so far the only issuer that issues in the public market. We expect that to change either in the second half of 2017 or first half of 2018, where we expect other issuers to come to the public market. All US carriers have actually already financing vehicles in place, but they're currently being financed by the bank market and therefore not very visible to the public domain.
Okay, excellent. Another off-the-run sector that I want to touch on is aircraft finance. So we've seen significant growth in that sector. Hylton, what's our outlook on the aircraft finance ABS side?
Yes, and we expect that growth to continue this year, both from just pure play lessor financings as well as portfolio sales from the big lessors who focus on new fleet securitizations and the mid-late stage lessors as well, who focus on aircraft 12 years plus or more. Airlines are definitely benefiting from global macroeconomic conditions. They're profitable. A good example is here in the US. We're at record profits last year. And then moving on to asset values and actual deal performance, aircraft values are strong today given the demand globally for aircraft, both for new and used. You can see the manufacturers have huge backlogs. Airlines are in good shape. There are some rumblings though. A good example is the Middle Eastern carriers and the recent Alitalia bankruptcy. And then utilization rates for aircraft are very high, close to 100%. Most aircraft are actually out there being leased. In terms of risks, geopolitical terrorism still exists today. That's not going away. And then the last thing I'll touch on is structural features. We've seen some positive developments there in ensuring that cash flows get distributed down to both equity holders as well as actually bond investors and don't get leaked out structures at the detriment of bond holders.
Very good. Gentlemen, thank you both for sharing your perspectives with us. If you have any questions about the topics we discussed today, please contact us at the email on the screen. Thanks for watching.